right, guys. Thanks. Appreciate you having me, and we'll have some fun here. So, just to get an idea, how about Fib? What is the feeling out there? Are you using Fib? And if you don't mind, just go ahead and type in yes. Or if you don't use it all and you think it's voodoo, go ahead and type in no. I just like to get a feeling for what we're doing here. And Dan, I can't see the comments. All I see is green flags. So somehow I'm kind of blocked from seeing those responses. Maybe you can, I don't know, adjust that for me.
Actually, Todd, before we get started, I want to address that. So you should see a question section.
Got it. Sorry. Okay. Yep. I just had to scroll up a little bit.
There you go. All right.
All right. Perfect. All right, guys. So it looks like about 61%, 61.8% of you use Fib, and 38.2% of you don't use Fib. Sorry, that's a bad Fib joke, but actually it looks pretty accurate. About 2/3 are using it, and 1/3 say it's voodoo. It is voodoo, but it works, so we use it. So we'll have some fun here, guys. As I said, I like to go back and forth and not just sit here and lecture you and tell you how wonderful we are. I like to find out about you guys. So go ahead, type anything in. I'll get through the presentation. We have plenty of time. I want to look at some live markets. I'm in some trades now. We'll go through them. So obviously we'll be talking about Fib. I'm an options trader. I've traded everything from I was an equity day trader, traded futures on a CTA. I've traded FX on a hedge fund. I've kind of been around the block. It's all I've ever done for work is trade and run my business ever since I dropped out of corporate life in 2010. So we can go any direction you want. So we'll have some fun, and hopefully you can pull away a thing or two, and maybe I can get you to look at Fib in a different light. So we got to do the warning, of course. It's a dangerous game. Don't be risking capital that you can't afford to lose, because when you first start trading, you're going to get slapped around a little bit, and you got to learn how to get your feet underneath you before you can start holding your own and before you can start making some money. So I look at trading like a boxing match. As I said, this is all I've ever done is trade. I know you're going to take some shots in the beginning, but you got to learn how to get up off the mat, keep fighting. You never go for the knockout punch. You're always trying to win the decision at the 12th round. So that's the reality of trading. You're not going to hear anything else from me that this is easy game and it's just do this indicator and boom, you're going to make money. And guys, this is a skill game you got to work at for a long period of time. So the upside's amazing if you can make it through that learning curve, but there is a learning curve. That's all you'll ever hear from me. So we're going to be talking about some live trades. I'll show you my live trades. We make money, we lose money. As I said, trading is a boxing match. So let's talk about Fib here before we jump into some of the trading stuff. It's kind of a fun chart. From 1925 low in the Dow, or 1923 to 1929. You guys know what happens next, right? Crash. Okay? So looking at a Fib study of the 1923 to 1929 rally, we went from Dow 85 to Dow 386. We crashed right down to this level. Bounced up, retested, bounced up a third time, or second time, broke through, actually retested that as resistance, and then broke away. What is this level? Well, this is kind of the foundation of what we're going to be talking about here for the next hour or so, which is Fib. So we held this. This is the key basis of what we're doing, the 61% retracement, which is your Fibonacci ratio. Okay, what are the chances that we held the 1929 crash at the 618 retracement? Do you think in 1929 they stopped selling the market because we're at the 618 retracement? I don't think so. Fibonacci wasn't even applied to the trading markets until the 70s and 80s, 40 years later. Number one. So does it work? Yeah, I think there's something here. We're going to talk about some myths. Does it work? Does it work in volatile markets? Do technicals work in volatile markets? Absolutely, because technicals are meant to detect human mass collective emotion driving price, which is really all that changes price, is the crowds acting emotionally, voting based on what the rest of the crowd is doing. People tend to make the same repeatable patterns time and time again, and that's what makes technical analysis possible. And that's what gives us an edge over fundamental traders. Okay, so I think it's important to realize that it's not just a self-fulfilling prophecy. There is actually something to these voodoo numbers. Okay, so we're going to be setting up some trades based on this ratio as well as some other ratios. A lot of things I hear is it's too subjective. How do I know which ratio to use? I totally agree with all of that, and maybe I can show you and provide some answers to those two objections. Oh, let me get those questions down. There we go. All right. So 618 held this, and we dropped away. So as I talked about, couple myths out there. Technicals don't work when markets are highly emotional. The U.S. economy was only 150 years old at that time. We'd never seen a break like that. That was the most emotional market we've ever seen. And number two, technicals are self-fulfilling prophecies. Again, do you think they stopped selling the Dow in 1929 because it was a 618 retracement? I don't think so. I think there's actually something to this. So a little bit about me. Dan mentioned it. I work at home. I'm a corporate dropout. This is my wife Trish, and we have twin boys, Jake and Brody. They're 2 years old now. We love them, driving us insane at the same time. Those of you who had boys know what I'm talking about. They're wild. I worked in the city. I met my wife grocery shopping one night in Hoboken, New Jersey. I'm originally from upstate New York, and yep, he was there at the weddings. Got to show it. Half of you probably love me. Half of you probably hate me. Whatever. He's a very nice guy. He was a gentleman at the wedding, so it was kind of fun. So I met him through CNBC, and he was nice enough to come to the wedding, and it was interesting. So. As I said, I work at home. I left Wall Street in 2010 to run the research business, and I like to have a lot of fun with this. I wanted to see my kids grow up and trade well, support them, hopefully build this business enough so they can take it over when they're older. And that's the upside to trading. So it's a lot of work, but you got to love it. You got to love the process, and the rewards are ultimately worth it. But you got to love the journey. Hey Trevor, how you doing? I'm not answering that. Some people say love you, some people say hate you. Yep, that's the way it goes. So CNBC, yep, I've been doing CNBC since 2006. I'm in my second 3-year contract with NBC Universal, and they lean on me for the technicals, and I've been on quite a bit over the years. Maybe you guys have seen me on there. So I have a good relationship with them, and I bring the technical angle to CNBC, and that's that. So I want to talk about something. Back in August, I made a prediction on TV that crude, when it was at $42, would go to 26. Well, I don't think you can hear this video, but it's basically a Fibonacci projection down to the 26 low. And I don't know if you guys can hear that. But basically, CNBC kind of was, they put a lot of play behind this story, and it wound up being the #1 story on CNBC.com and Yahoo Finance. And you had all these macro funds putting millions of dollars into research trying to find the bottom in crude oil, and we wound up projecting the low in crude and trading the low in crude by a simple piece of analysis that I can teach you to do in 30 seconds. Okay, so that's what we're going to be talking about here today, is this tool along with two of the other tools of Fib that help you set up very actionable trade setups. So just kind of going back, and I'm just going to go through this a little fast. After the 1929 crash, we rallied back to a 50% price retracement and then sold off down to a low of 40 in the Dow. We did check the 38% price retracement. We did check the 50% price retracement, and then we broke away. Went down to a low of 40 in the Dow. That was in like 1930 something. Rallied up, and then look what we did again. We double bottomed on the 618 retracement, and then that was the low, and the Dow rallied. So guys, you can't make this stuff up. You can't deny it. There is something to it. 1987 crash, we rallied up, sold off to the 618 retracement. Now, one of the things I hope you're thinking is, well, Todd, how do you know to select this low and this high? And if you're asking that, I would totally agree with you, and I'm going to show you exactly how to do it. I can give you a very objective way to select your starting and stopping points with Fib. Okay? So one of the concepts I want to talk about is, when you first start trading, you probably read a book about indicators, and you throw these indicators up in your chart, And you're trying to figure out, all right, well, I only have two, but if you were like me when you first started trading, you had like 3 or 4 or 5 different indicators. You'd use one for a week, you'd switch over to the other one. You're indicator hopping, trying to figure out, which signal to take. Stochastics are a faster moving indicator than MACD. So like, all right, I just got a sell signal there, just got one there. Which indicator do I take? So while you're, indicator hopping and watching all these different signals, you realize that these indicators are in fact reacting to price action. So while you're indicator hopping, trying to figure out which signal to take, all of those indicators are reacting to price action, and all your competing traders are using the same indicators you are. So you're basically competing with all the other traders, reacting to the same different indicators that are in turn reacting to price action. So you're like third in line, behind price to try to make money. I don't see how that's an edge. Like, I don't know how that helps you. Like I said, this is all I've ever done in this industry, and if somebody can show me how to make money with lagging indicators like this, please show me. I'd love to be able to use them, but I just don't. Because, one, they're lagging. 2, they tell you what you already know. Okay? If you've identified good resistance ahead of time, the market starts to reverse and you initiate a short trade, indicators are going to flash the signal after. So they already tell you what you already know. Okay? A trade, from my point of view, should look like this. And again, guys, I've spent my whole career, which is coming up on 16 years, studying these markets. I've been through everything. And what I'm going to share with you here is literally the culmination of everything I've done, my life's work right here. I've come away with 3 very distinct methodologies or schools of technical analysis that helps me get ahead of the market, anticipate my trades, not revenge trade with a plan. And I think in today's markets, that's what it's all about. So this is a trade that we try to set up. This is a winning trade, but this is what a winning trade should look like. This is actual trade we put on. Anticipating support between the zone. If we move into that zone, only that zone, do we then initiate entries with very tight stops below the support zone. Here we did a 25-27 call spread in ITB, which is the ETF. That one worked effortlessly. They don't all work that way. But a trade should be just like this, anticipating a support zone ahead of time. If you get it, perfect, it moves up to your target. Okay, this is McDonald's. Again, anticipating resistance ahead of time. Once you move into the zone, you get this signal, boom, you're short. Hopefully the trade works out. If it doesn't work out, that's fine. Stop loss goes off just above. You have a very tight risk parameter. You're risking a small amount to make a larger amount, and you just rinse, repeat. That's just the process. Okay, so you can do this stuff. You can anticipate. Yes, I trade live. I trade real time in front of my clients. I've been doing it, as I said, my whole career. So, yeah, you're just using some simple fib. Yes, you can make money trading. We had a trade on. This one was one of my luckier ones, but it's a great example of one of the concepts I want to talk to you about today, which is this concept of trend trading versus counter trend trading. And most educators or books that you read on technicals and trading will say you only want to trend trade. I kind of agree with that. I think 80 to 90% of your trades should be trend trades, but 10 to 20% should be counter trend trades. There are times with true leading indicators where you can fight the trend of the market and put on counter trend trades. And the beauty is, a lot of times if you find a good opportunity to counter trend trade the market, your risk is very clearly defined because you're a disciplined trader, you're trading with a plan, you know exactly where you're going to get out of the trade. The risk is quite small and the reward is quite large. So I find the best reward to risk ratios are in counter trend trades. Trend trades, though they have a higher probability of success, they tend to come with larger risk to the same part of reward. Okay, because there's so much leeway to figure out where a trend is still in play and where it's not in play. It's got to drop quite a long ways to no longer be in an uptrend. So you have to use larger stops with trend trades. So I'm going to teach you how to do that. So this was a trade in GMCR. and we did identify a fib support zone for our research customers, and we put on a kind of a fancy option strategy called a call ladder. We sent the alert out to customers, which is right there. We did the 52, we sold the 52 half call, bought 55, and bought the 57 half. We did it for a net credit, and I won't get too much into the options because I know not all of you guys are trading options. Just looking for a move up into the fib support zone, into the 59 target. Well, it started to move up, and then basically what happened is we gapped up on bad earnings. I'd already anticipated this zone of support. We gapped up on bad earnings. I was like, okay, I'm in. As soon as you gap up on poor earnings into a fib support zone, boom, you're in. So we were lucky on this one. The stock got bought out. The stock was up 78%. Options we bought for 85 cents went to $32. So I had customers literally trading 2 contracts, and 3 contracts you made $20,000 and $30,000 on that trade, just on 2 and 3 contracts. So it was a nice example of a counter trend trade. We got lucky. We don't always get that. If we get one of those a year, those are excellent. But it just goes to show that you can counter trend trade with true leading indicators like fib. Okay? So fib to trading is like this analogy, right? If you guys have been to Vegas before and you want to go, let's say, up to the Encore shopping, you're staying at the Bellagio, like, all right, I got to go out here, got to go, what, 4 or 5 blocks. You know, you walk 4 or 5 blocks in a normal city, it takes, you know, half hour, 45 minutes. Well, in Vegas, when you look at the map, you got to, there's no straight lines. You got to go like up and over and, you know, cross the bridge and by the line of the guys handing out the flyers with the naked ladies on it. If you've been to Vegas, you know what I'm talking about. And once you add up all those twists and turns, you find out the trip's actually going to take you like 3 hours to walk that far. So fib is this little scale down here at the bottom that helps you measure the expected distance of the trip. And once you have an expected distance or duration, you can plan your trip accordingly. And that's the same thing with trading. Once you have an idea of how long the trade should last, it helps you position size properly. It helps you gauge your risk. For option traders, it helps you pick out the right strikes and the right expirations. So your charts are the street map, and fib is a little scale down here that lets you figure out how far the trip should be. And for today's competitive trading markets, you got to have a plan, an idea of where you want to be in, where you want to be out. Okay, so we're going to jump into fib here a little bit. These are all the ratios that I use. There's a lot here. I'm happy to give you the presentation, so you know, don't worry about writing them all down. But we're gonna focus in on 2 ratios, and I saw somebody writing about it up there about the 786. We're going to talk about a good 786, which is a good ratio right there that we're going to have a trade set up there. Also up to the 1272. Okay, these are 2 very good levels. This is a fib retracement, and this is a fib extension. So I'll show you a trade set up there. But first, you know, we talked about this already, that fib is so subjective, right? How do you know, like, where to start and stop the ratios? How do you know where to, you know, which numbers to use? There's so many of them out there, right? It's very subjective. To a point, I agree, but I think with this very kind of laid out trade process I'm going to give you, I think I can make it a little less subjective and more useful for trading for you. So first we have to do swing waves, right? We have to identify where to start and stop trends and corrections. And if you look at any basic technical analysis book, it's going to introduce this concept to you, which is swing waves. So a swing wave high is a high bar with a lower high to the left and a lower high to the right. Swing wave low is a low bar with a higher low left and a higher low to the right. So up close, there's your high bar, and you can use candles or bars here, doesn't matter. Closing charts, line charts won't work because you need to see the high of the bar of the candle. So you got a high bar with a lower high left, lower high to the right. Same thing, swing wave low, no problems. Now we need to begin quantifying how significant those swing waves are. This is going to be the foundation of where we start and stop our fib measurements. So the minor swing is a swing wave high or low that's not exceeded in the 5 bars before the swing and the 5 bars following. A major swing is 13 bars before and after that don't exceed that swing wave. So here's what it looks like. If you have a swing wave high, which here's a high candle right there, if you can count 5 bars to the left and 5 bars to the right, that's going to be a purple dot right there. Okay, that's going to be a minor swing wave. If you can count a swing wave low that's not exceeded, this low right here of the candle is not exceeded in at least 13 bars before and 13 bars after, it gets a blue dot. That's going to be a major swing low. So you got a major swing wave high there, you got a major swing wave low there, minor swing wave low there. Okay, and I've got this built as an indicator. It's no problem to get a hold of. I've got it built for all the major charting packages, so you don't have to count all these numbers. Okay, so this is Thinkorswim with minor and major blue dots. All right. So, what we're going to do is basically use these purple and blue dots to set up trades, identify support zones that can get us into the trades. All right. Now, from there, once we understand swing waves, is everyone okay with those swings? Major, minors, you guys okay? If you guys want me to review it, let me know. But just stop me if I can review any of that. Okay. Looks like we're all right. So from there, let's just kind of shift gears. And I like to look at the trend of the market in a very simple way. And that's just the 55 EMA. Now, if the moving average is pointed up, guys, it's just as simple. You're in an uptrend. If it's in a downtrend, if 55 EMA is sloping down, you're in a downtrend. Okay, like I'm saying here, we're not trying to buy pullbacks to a moving average. We got to be more precise. The moving average is only designed to indicate the direction of the market or the trend. And remember earlier I said 80 to 90% of your trades should be trend trades, and 10 to 20% of your trades should be counter trend trades. Well, how do you determine the trend? Very simply, the 55 EMA. So circling back to the first FIB tool, now that we understand swing waves and what the trend of the market is, let's look at retracements. Your mission statement in trading, guys, is just this. You want to buy short-term weakness in rising markets and sell short-term strength in falling markets. That's your MO in the trading markets. FIB retracements are going to help us do just that in line with the 55 EMA. So what that means is here's the 55 moving average. It's heading up, right? We're in an uptrend. The whole point of a retracement is to get you to study the beginning of a trend, the end of the trend, and figure out where the correction might end to initiate a long trade in anticipation that that prior trend will resume and will move up. So if the stock goes from $200 to $300, that's a $100 rally. A $38 pullback, so 38%, which is a shallow FIB retracement. 50 is your middle, 618 is your lower, and then we'll even get down as far as 786. Good question there. Can the 20 work as well? What I found, guys, is I think anything less than 55 is too whippy, too many false signals. So I like the 55. I think anything larger than 55 is too lethargic or too slow to show that there's a trend change. You can use it if you're a little bit, you can use a shorter moving average if you want more signals, but I think you're going to get more false signals with anything shorter than the 50. And I use 55 because it's a FIB number, but you can use 50. It's the same thing. Louis says, isn't more than 618 too risky to enter? Isn't it more than 618? I don't quite understand that. Isn't more than 618 too risky to enter? Give me that in a different way, Luis, and I'll definitely answer that question. Okay. Yeah. Let me just give it to me in a different way. So let's talk about some entries. Okay. We understand what FIB retracements are. Okay. We understand where swing waves are. We understand how to determine the trend of the market. So how do you actually make money with this stuff? So what I look for on good trend pullback trades is a three-wave swing. All right? I'm looking for a drop, a rally back up, and then what we call a stop run bar. Okay? I never buy the first pullback. I rally up, you wait for this, there's usually a head fake up here, then you drop and you need to make a new low. Okay, you're looking for a stop run. And a lot of times, one of the questions I get is FIB self-fulfilling? Just because market makers and algos and high frequency guys know the retracements are there, do they often act as a target? And I think the answer is yes to the 618 retracement. A lot of times you get stop runs below the 618 retracement, but by the time they're done, whether it's market makers, algos, hedge funds, whoever, a lot of times when they're done running those stops below 618, it'll get down to the 786, and then it'll go. So I do a lot of trading down at the 786 retracement. Okay. Louis says, would you enter a position in a level lower than 618? So there you go, Louis. Yep, just answered that question for you. I love the 786 because again, by the time they're done running stops below, it usually collects itself, and the selling pressure eases down in the 786 retracement. Yep. So one of the entries I like to use, let me just review this. So I never buy the first pullback because there's usually a head fake. Okay, a lot of times it goes to a lower high. Sometimes it goes up and does make a slight new high, but I never buy that first pullback. Sometimes I miss entries, but more times than not, you get the stop run, you drop down. Once the stop run is complete, then you're looking for entries. And here's how you get long for stock traders or futures traders or Forex traders. You find the low bar on that stop run, what we'll call the gotcha bar. You buy one tick, pip, penny, whatever, above the high of that bar, right there. Okay, you got to wait for this low bar to be taken out, and that's your entry. Your stop loss goes below that stop run bar. Okay, that's your risk right there. You know it ahead of time. Okay, so you get the low bar, the market's trading up. You're like, okay, once we get above this high, I'm in, and you know the distance right there where your stop's going to go. So you calculate what this distance or what this risk is ahead of time. You say, do I want to risk that amount of money, depending on whatever position size I want? If the answer is yes, go ahead and take the trade. If no, then no, you've got to move on. That's not a trade for you because the risk is too much. Do I use an indicator? I don't. I don't, and I'll show you. Indicators tell you what you already know. Okay, and I'll get into some live charts and I'll show you what I mean, but no, I really don't use indicators. I mean, they're just after the fact. They just don't do anything for me. All right, so let's take a look at this trade setup on Amazon. So 55 EMA is up, so it's a slight uptrend, but what's the trend? We're pretty much on the bottom left going up to the top right, so you got an uptrend in the EMA. You're waiting for the trend to pull back. So all right, I'm interested in longs here. But remember, never buy that first pullback. Here's how you very clearly and objectively draw your fib retracements. You find the most recent blue dot high. Okay? Now, think about this. This blue dot isn't going to appear until you see 13 bars to the right. That's a lagging indicator. But that is good because what that's forcing you to do is be patient on your pullback entry. Waiting for at least 13 bars on the pullback, that is making you wait and be patient until you get the dot. That's a good thing. Trust me, all of us are too, I think, hyper, or most of us, I can't speak for everyone, I don't know everyone, but in my experience working with traders, you guys are too anxious to get into trades and you accept less than premium entries by kind of jumping the gun in terms of entries. So you find the first blue dot high, and then you just simply find the most recent blue dot low that is below the current price. That is the starting and stopping point for your fib retracement. That's it. You pull out your retracement tool, you click blue dot low, blue dot high, and there's your retracement zone. We're waiting for that three-wave swing, so there's your first push. Possibly there's our head fake right there. Okay, there's the head fake. Waiting for a stop run. If we get it, then I'm interested. There's the stop run. Nasty stop run. Once you take out the high of that bar, then you're in with a stop below the low. So for this three-wave setup that I'm teaching you, I don't know which fib retracement's going to hold. All we're using, guys, is the 38 to 786 zone for this three-wave pattern. There are other fib studies or fib trade setups I'll teach you where I can tell you where the zone is that I anticipate the market's is gonna react. I'm short Netflix right now against the fib resistance zone, and I'll show you that trade setup. But when you're using just a simple fib retracement like this, there's no way to know which level is going to hold. But you're looking for the three-wave swing. Okay. Perfect. So the blue dots and purple dots, I see some questions coming through. That's a swing wave indicator that I can make available to you. It's a plugin. I have them built for all of the major charting packages. Not a big deal, right? And you can even adjust the settings, and I will do that with depending on the volatility of the stock. Like here's Netflix, and on Toss on Thinkorswim, and I have the indicator loaded up, which my charts are too scrunched up. So here's the swing wave. So right now on Netflix I have 13 and 5, the settings for majors and minors. So you can customize and do whatever you want. Okay. Good questions there. Do you need to see the blue dot? Can you use a purple dot, Trevor? You can use a purple. I like to do the blue dots because you know that's the trend. Like for instance, here's Netflix, right? Where do you start and stop the fib retracement on this Netflix? Well, okay, is it in an uptrend or downtrend? I think this is the 55 right here. So clearly we're in a downtrend. You know, this is the low right there. That blue dot. There's a blue dot. I mean, that's, you know, this is what I'm looking for. I'm going to start the retracement here. So we'll go drawing, fib retracement. I'm going to go low to high. That's simple. Right now we're testing the 38% retracement. I didn't draw that correctly. Let me go with this. And got to make sure it's right on top. There we go. So we're right at the 38% price retracement. Okay. You can do a secondary fib retracement. It's not going to be as significant, but you can go off this purple dot high. And this is a kind of a more advanced concept, which is called stacking the zone, which is finding zones of fib resistance, which is going to be the real key of how you trade effectively with fib. But that's going to be a conversation for in the future. All right. How do you decide what the ending bar will be? The candle indicator. You've got to make. Let me keep going through there, Dave, on these trade setups, and I think it'll become clear. Okay. How do you change the setting, trading weekly options or monthly, James? That's a toss question. I'm gonna save that for the end. It's kind of off-topic presentation, if that's okay. Starbucks 55 MA is up. We're buyers. We're starting to pull back. We're looking for the three-wave swing. You identify the highest blue dot right there. You identify the most recent blue dot low right there. You pull out your retracement tool, which is the same for all major charting packages. You click the low first, the high next, then your retracements unfold. There's your 38 to 786 zone right in there. That is your focus zone for this particular trade setup that I'm teaching you. Here's your three-wave swing. One, false break up, and then this was nasty. Big old gap down. We did make a new low. We ran stops below the 38% down into the 50%. We did a double bottom. We took out the high of this bar, and we are long above this high. I did take this trade in Starbucks. I sent out the text message to our clients, new trade alert by Starbucks. 52 weekly calls expired in 16 days. Sell the 53 half weekly calls expired in 16 days. Total cost of 78 cents. Stop loss 52 quarter in underlying Starbucks. So here's that three-wave swing. 1, 2, gap down, stock trying to act weak, just running stops. We take out the high. I was a little late entering this trade. I think I missed the first 2 hours. I should have been in here, but we got in like right around there. And we were looking to get up to this fib target up here, which I'm going to teach you next. So we bought the 52.5. Sorry, we bought the 52 call, sold the 53.5 call. Bought 52, sold 53s into this fib extension target. And I'll teach you why we did that in a sec. This one was working so well. I actually sent the alert out. I was like, all right, close all of your short 53 calls and keep half of your long 52 calls because the trader's working so well. We just kept some options, and we made some good money on that trade. Okay, so yes, I do trade this stuff live. All right, so you know, it's all about the art of the trade, account risk and trade management. The fib stuff I can teach you guys in a weekend. That's no big deal. But handling your trading capital, how to execute the trade, if you're into options, this is something that is going to take you a while to get proficient at. But the chart tools, that's the easy stuff. I can teach you that, no problem. Time frame, you can, if you're an options trader, Kasun, you can, I think it's hard to intraday trade this stuff. I'm a swing trader. I like to hold trades for like a week or 2 weeks if they're really working. If you're a day trader, you can trade options, but you're not going to take advantage of any of the premium decay in options. You're going to have to buy deep in the money options and just use the leverage, which is fine, but you can do this on intraday stuff. I like swing trading options to take advantage of the swing trading cushion that options offer. And we also sell a lot of options as well. Sell calls above fib resistance and sell puts below fib support. Yes, I do, Joe. Yep, I have an options course. Don't worry, I'm going to make you a nice offer at the end here. It's pretty competitive. So, yep, no problem. Okay, so, guys, I just taught you all the way up to right about here in our trade plan. This is a simple ABC trend pullback. This is one trade setup that I'm teaching you right now with fib. So let's get into the take profit part of it. We just covered fib retracements. Let's now do fib extensions. So a lot of words here. I'll just kind of skip through this. Retracements are used to measure how far a correction will go before the predominant trend resumes. Extensions measure the corrective wave to project how far the next trend will go. In English, it's a retracement that just goes more than 100% and you're studying the known distance of your correction. Here's what that looks like. Okay, this is the NASDAQ NDX on the 3-hour, 55 EMAs up, so you're in an uptrend. Any swing that goes against the trend is a correction. Just that simple. Right? This is a pair of 3-wave swings. This is interesting. Down, never buy the first pullback, false break, gaps to a new low, take out the high of that bar, you're in, up, and here's one. You never buy the first pullback, false break, oh, that sucks, go down, stop people out, get everyone upset, then it goes. That's what the markets do. They try to frustrate the most amount of people out of the market before they go in the direction that you originally thought they would go. That's how sick and twisted markets are. So how do you do fib extensions? You look for the start and end of a correction. You pull out your retracement tools, the exact same tool we just used in the last setup. You click the beginning of the correction, the end of the correction. Once you go past 100%, if this was a $10 drop, that's a $10 rally. Everything $10 and below is retracement territory. Once you go above $10, you're now into extension territory. These guys serve as your upside take profits. Okay, if you're an options trader doing debit spreads and you're looking for good levels to place your short strikes to create debit spreads, these are wonderful places to structure your debit spreads. Okay, so back to our 3-wave swing entry. How do we trade this? This is how I like to trade this. You get your 3-wave swing. There's your low stop run bar. You take out the high of that bar you're in. Remember I said the 786 a lot of times is a good reversal point. The markets love to run stops through 618, and that would be right about here. This drop, let's say that was a $10 drop. This would be a $6.18 rally. It's not shown on the chart, but 618 is right there. We try to run once, we try to run twice, we try to run 3 times, we even try to run a 4th time. A lot of times you'll see that stop run through 618 up to 786, and then it'll reverse. So I always like to take some profits off the table at the 786 because it could be one of those times where it's a stop run through 618 and then it's going to drop. So I like to take some off the table at 786. Then I'm just simply looking for a move to 1272 to take a majority of the profits. Once you get up to the 786, book some profits. I like to trail the stop to a most recent swing wave low. I don't have the dots on this chart, but you just put it to the most recent purple or blue dot. And then you want to book profits again up at the 1272. If you want to keep some to try to get up to the 1618, that's fine, but really aggressively trail stops. Okay? You guys all right with that? that is a complete trade plan. I think it's a 9-step trade plan that I just taught you in like 30 minutes. Right? You're looking for 55 EMAs up, identify a 3-wave minor major swing into support, and are long above the high of the low bar. Place a stop below that bar. If you're stopped out, I will take this pattern again. If we're above the 786, I will try this setup twice. Book half profits at 786, trail stop to entry, or the most recent minor low. Book half profits at 1272, or trail stops and try to get up to the higher fib extension. That is a complete 9-step trade plan that I just taught you. Outstanding, says Andy. Yeah, this is a great setup. Trade these all the time. And in fact, as I said, I have a short going on Netflix now in this. So, okay, so debit spreads. Let's get into some option stuff. I love trading fib with options, right? At the money debit spreads, which means buying an option at or slightly out of the money or slightly in the money, and then selling a further out of the money option. That's the definition of a debit spread. Or when you're doing, stuff that's, if you're doing debit spreads inside of $10, a lot of people don't do option spreads greater than $10, or you're a baller and you're a big money swinger. A lot of times debit spreads, if you're doing at the money options, you're going to get a 50-50 chance of success. You're going to risk one to make one. But I think with the methodology I just gave you and the trade setup, your probability is higher. So what that means is back to the Starbucks trade that we did. Just bought the 3-wave swing right there. We bought the 53.5 calls. We're right at the money. And the upside objective, I sold the 55 calls. That is just simply the 1618 extension of your correction up there. So I'm trying to capture this zone right here. Okay, I don't generally expect a trend to break anywhere above the 1618 extension of the prior correction. That's asking too much from the market. That's why I love trading options, because you can buy a call, and if you just buy a naked call and you're wrong and the stock just kind of does this, you're going to get bled out with your theta, your time decay. Where this is your upside objective, so this is about having a trading plan, not trying to hit a home run. I did try to hit a home run in that GMCR trade, and we got very lucky. It was a good setup, but there's also a lot of luck in there. But we put ourselves in the position to be lucky. Most of the trades we're doing are just these short, singles and doubles trying to get up to fib extension. So you buy the money option, sell up to your fib extension, and if you collect it, perfect. Mission accomplished. So just another setup. I think this is the SPY. So this is a little sloppy setup, but I just want to throw a curveball at you. 55 EMAs up is the purple one. There's your drop. There's your false break. There's your stop run. Boom, that's your entry right there. Okay, you might have seen this as your 3-wave swing, and that's fine. Okay, look, drop, false break, stop run. Okay, you would have got in right about there, and you would have booked partial profits at your 786 retracement of this drop. You then would have been stopped out at break even, no problem. But guess what? You get to try the trade again because it went 1, 2, 3. Try the trade again, and that one worked. You see how that works? I'm looking for a 3. I jumped ahead, but looking for a 3-wave swing into the 38 to 786. There it is. 1, 2, 3. 1, 2, 3. Buy at the money calls, and you can sell out of the money calls up there. Now, I think I talk about this later in the presentation, I believe. But if you have a really expensive stock, or you don't want to do like a 208, 213 spread, you don't want to do a $5 spread, I like to break this up into, let me see if I talk about this. No, I don't. I like to break this up into 2 trades. If let's say you're trading Amazon or something, a high price stock, and you don't want to do a $50 call spread, I'll do it in 2 phases. Once you get the signal, which you buy the high above the low bar right there. There's the low bar right here. I know it's a lousy screenshot. There's the low bar right here. You buy the high above him. I like to buy an at-the-money option, and then phase 1 of the trade is just get up to the 786. So you buy like 209, sell 211. If you take full profits on that, great. Reload if you think we're going to go higher. then go 211, 213. You know, you could break it up. Or if you want to do a super high reward to risk trade on the entry, you could buy an out-of-the-money debit spread up here. You could buy a 212, 213 debit spread into the 1272 extension. That's going to be a huge reward to risk ratio setup. Probability of success is not high, but if you feel pretty good, buy the debit spread up here, and those are great setups. Time frame, I like trading a 3-hour chart, or like I like a 195 chart because it's 2 even bars in a stock market day. So I like looking at the 195, and I like getting down as far as the 39-minute chart, because there's 390 minutes in the stock market day, so it's 10 even bars. So I'm a swing trader, but you can do this stuff on a 5-minute chart or even a 1-minute chart if you want. I mean, obviously, you're not going to take advantage of some of the nice benefits of options. You can day trade this stuff, but swing trading, it works beautifully. You can these setups, this 3-wave pattern with fib, you can use at any time frame you want. I'm not going to get too much into this, but you can use these same tools that I'm talking about on the time axis to select the ideal expiration. Okay, if you see a blue dot to blue dot swing, 13 days, you get your 3-wave swing. Generally, I like to do 13 days at least in terms of how to select the proper expiration, and then I like to multiply it by 1.618. Right, so at about 5 to 6 days, whatever 13 times 1.618 is, maybe 18, 19 days out is really as far as you need to go in terms of options. So here's a setup. You got blue dot low to blue dot high. There's your 3-wave swing in GoPro. Looking for a move 100% of the prior blue dot to blue dot swing projected up from the end of the correction is going to be July 24th. And I like to go out to the 1.618, so that's going to put you into the 2nd week of August, the proper expiration for that debit spread, okay? And a credit spread as well. You know, you want to try to get as much data or time decay as you can on that on the credit spread. So, you know, what time frame you sell, you know, how long should the move last? The amount of time that was consumed on the clock here is going to have an impact on how far the next trend is going to go, if you're right. Great question there. Do I account for IV when buying debit spreads? Absolutely. Netflix, so I have the implied volatility percentile, very simple, nice setup from Sosnoff and Thinkorswim. It's actually Doe, he's over at Doe now. But he takes the implied volatility, which is right here on my chart. So right now Netflix is trading at a 57% implied volatility, 58%. That range in the implied volatility from 44 over the last 52 weeks up to as high as 98% volatility. This volatility right here lies in the 49th percentile, so it's exactly mid-range. So yes, when this is above 50, I generally like to do credit spreads, and when this is below 50, I like to do debit spreads. Just as simple as that. When I put this Netflix trade on, we were up at like 55 percentile, so I sold credit spreads. Can you guys see the 3-wave setup right now? Let me go to an intraday. Okay, this is a 195-minute chart right here. Retracements, like that. We're not quite there yet. I've put on a small position, but I'm looking to enter the other half in this zone, and I'm looking for the setup. Okay, we're not quite there yet. I need to introduce you to the next tool to complete this setup. Okay, so let's take a look at the S&P. We'll look at SPY. All right, where do you do your retracements in SPY? Okay, there's the blue dot low. Here's the most recent blue dot high that's above price, so that's the starting and stopping point. Get rid of you, 50%. Try to help, and look, we're right at the 618 retracement right now. We do have the 3-wave swing going on. You got a purple, purple. We did get a false signal there. You would have been stopped if you took the short. But for me, I'm an option trader, so here's what I do. I generally will try to stop myself out above the 786. So I'm continuing to be bearish the S&P while we're below 202. I'm going to continue to be short. Okay, I'm looking for resistance inside of the zone. There's the next tool that I would like to teach you that is going to help you study the three-wave swing. 1, 2, 3, and that's called Fib Extensions. Don't know if we're going to have time for that, but that is going to help you refine the zone of where you think the potential reversal will be in the market. Okay, so that's that, and then we'll go like this, Fib time extension. How long should this move last? Blue dot to blue dot. Cancel right extension. You got to keep it clean. Cancel downward extension. Things get a little messy when you start drawing all these lines, so you got to stay on it, or else your charts are going to look like a nightmare. I like to pull him up. Perfect. I'm going to get rid of all these levels. I know I'm not going to use them, so I'm going to get rid of them. Keep it clean. Keep it clean. Okay. Right now, we're at a 38% time retracement of this drop. 50% 618, 786. I like to measure up price and time to come up with the ideal stopping point in both price and time for trades. And this is the ideal zone right there. You could even get rid of all this fib analysis that you just did, and I can teach you guys how to do this. But you could even just leave that right in your chart, and to keep things simple, if you just leave that highlighted square, here's your anticipated sell zone for the SBUY right in there. And if you start to get reversal signals, take them. Okay. All right, guys, that is that. Gold. I'm long gold right now, actually. I'm long gold. Let's do some. Let me show you guys, if you guys are interested, let me show you how to continue on with me. So, we talked about basically being patient, using those swing waves, looking for a three-wave pattern to initiate trend trades. Just be more patient. How many times have you guys done this? We've all done it. It sucks. But we've got to stop doing these trades. You hear talking heads on CNBC saying crude's going to 26 bucks, starts to break down. You're like, all right, I'm going to get shorted at the lows, and you get short here. Market goes up. You're like, oh no, what did I do? Oh, and finally comes back to break even. Like, oh, thank God. And then it rallies back up. Be like, I can't take it anymore. You finally stop yourself out right there, and then it goes. And then you're really mad. You're down $1.50 in crude oil, which that really hurts. Which, if you just waited for the three-wave swing right there, you would have been short below the low of the high bar, which is right there. May have taken some profits at the 786 retracement of this move. Comes back, stops you out for a very small amount, and then it goes. You're like, all right, well, that's a bummer. Maybe I got some maybe I took some profits there at the 786 retracement. Rallies back, small stop, no problem. Much better experience than being short down here, going through all this torture, only to see it go. Okay, how many times you guys done that? We've all done it. That's how the markets are designed to make you feel when that's the right time to get into the trade. Everything we're doing, all this voodoo that I'm talking about here, is designed to prevent this kind of setup right there. Okay, so having a game plan. I do a lot of work. I love getting inside the charts. You got to love doing this. I hope you do too. And with these tools that I'm giving you, you can form a good game plan and stop those emotional entries of chasing those lousy setups. So if you're sick of trading those guys and you want to start looking at reversals that other people can't see and don't see, then I think I can show you a pretty good way to look at the market. So we want to anticipate the entries, use the leading indicators. You got to trade less. Those of you who are options traders, have you guys ever looked at your option bill, your commission bill? It's insane. You got to trade less. Anticipation equals performance. I love this quote from Tony Robbins. Anticipation is the ultimate power. Losers react, leaders anticipate. And that's exactly what I'm talking about here in trading. So if you want, we can look at some charts. We've already been doing it, but we can look at some other setups. If you want to take your trade to the next level, I can help you find better entries, find better exits. The only problem is most people overcomplicate it, and also they don't really know how to teach you fib in a very concise manner. I've shown you a 9-step trading process using simple retracements and extensions that you can take away right now and begin trading. I can teach you to do this in a very straightforward, uncomplicated manner that doesn't make your charts look like there's fib all over the place and it looks like your chart's having a seizure. So the course we're talking about, this is the best way to trade fib. It's an on-demand course. It's packaged up. It's ready for you to view right now. So we'll show you how to calculate the fib support and resistance zones, which is using the 4 tools of fib. I showed you one and a half fib tools. I've got 4 price tools to show you, as well as the 3 time tools. Show you the trade setups and also show you the swing waves, how to use those swing wave indicators. So everything that's included in the course is right here. How to construct a fib support resistance zone. I show you my advanced fib patterns. Those are called harmonic patterns. Those of you who really have a good grasp on fib can get into these a little bit more advanced patterns. I do show you my favorite time frame to trade, but you can, as I said, trade on any time frame. Options, I generally recommend you're swing trading, 2, 3, 4 hour charts and maybe daily charts. I give you trading rules, fib ratio settings. I show you how to set up the fib on all the major charting packages. Checklist with cheat sheets, entries, exits, stops, targets, how to scan the market for the best fib setups, how to filter out those trades. Basically, stop getting head faked and taking those lousy entries by selling a market at the low and stopping yourself out at the high. I appreciate that right there. Kasoon says your YouTube channel is a good place to learn. Yeah, I do a lot of. I'll show you that YouTube channel. I have a lot of fun doing videos on YouTube. So we also traded live. After the 3-hour content session was over, we did trade live, and we recorded an archive. So I trade my account live. I show you exactly how I get in, get out. Did all the Q&A. That's all recorded and ready for you to view. So it's like 10 hours of material. So if you want to go to the next level, stop chasing those poor signals, being able to finally understand and fib and recognize the best setups. If you want to anticipate setups, as we talked about, and this is what I love. Like, you ever draw in like a zone like this, go away for 2 or 3 days, and then just watch the price action just like go like this in reverse, just as you thought? Like, that's the coolest thing to me. I love that. If you go away for 2 days and you see price action fill itself in, happens all the time with this methodology. Other people can't see it. Okay, this is a true leading indicating way to look at the market. Okay, let's see. This is not the Holy Grail. Okay, I'm not going to tell you this is the keys of the kingdom and you'll be on the yacht with the Wolf of Wall Street by March. I can promise you that's not the situation. Okay, this gives you an edge on the market, and most importantly, it forces you to trade with a plan, which we as all traders know the biggest enemy in the market is not the market makers or your broker, it's you. It's to keep our own emotions that make us bad traders, to keep those emotions aside, focus our energies the right way, so we are trading as cool, calm, calculated, pre-planned, and that's the way you identify the best turning points in the market. So everything's included in there. If you're not happy, money back guaranteed, no problem. You got to give me an answer. That's not. You can tell me one reason why you didn't like it, and you can have your money back, no problem. I'm not going to give you a hard time. If you're not happy, there's no problem. It's not a very expensive offering. We're making this highly discounted for you. We've sold it for a lot more in the past. This has occurred in the past, but is ready for you to view now. So here's the website you'd like to get into, tradinganalysis.com/strike, S-T-R-I-K-E. That is my website, tradinganalysis.com, and then you go /strike. Here's everything you get. The advanced fib patterns, it's actually the 4 tools of fib. Art of the money management, that's account risk and trade management. Stop trail plan, checklist cheat sheet, profit taking plan. 4 live analysis sessions. I traded live, recorded them, so you get see me trading my own account, live capital. You get the swing wave indicator included here. So those are the purple and blue dots that are you can upload to your charts. So that's included. This is worth. You also are going to get 30 days to the alert service. Okay, altogether worth over $1,100. $197. Nope, not good enough for you guys. This is not the New York Expo, but we did it earlier there, $97. Okay, I just did this at the New York Expo last week. Okay, so this is still in play, $97 for this setup. Okay, so hopefully you guys want to get involved on that money back guarantee, just $97. Tradinganalysis.com/strike. Okay, how about some questions? It was recorded. You have immediate access to the on-demand video. You don't need special software to do this. If you want to use the swing wave indicator, you will need to have one of the charting packages that gives you the ability to upload the custom code. Okay, this is a one-time fee. You can keep it forever or at least 61.8 years. It will work on all markets, any market that's freely traded, and actually it's closer to 15 hours. I was wrong there. Okay, so that is the website right there, tradinganalysis.com/strike, and I will throw it in there for you right now. www, and I'll put in the link for you right now in the chat window. Yep. Wow, I didn't know that. That's interesting. Okay. Yep. Strike is it. Perfect. Okay. So that works. Thanks, Dan. I had no idea. So that is the offer. Guys, I know we have a little bit of time, so, you know, as I said, I'm a trader, not much of a salesman, as you can tell. I just kind of blew that. That's all right. I think I'm a better teacher than I'm a salesman, so hopefully that's reassuring to you. So that is the offer right there, /strike. I should probably take those caps down. All right, perfect. Yeah, I think we'll leave it up for a couple days there, Walter. No problem there. No problem there. So lot available to you there for 97 bucks. So that's interesting. Okay, you guys want to take a look? You guys want to take a look? How we doing? We got 10 minutes, 9 minutes until I'm off. Do you guys want to take a look at some live markets? You want me to take a look at some symbols? You know, what concept can I show you here in terms of doing this? Chris says, hey, I'm a fairly new member of your site. Purchased a Fib course recently. Is there more in this offer? If you've got the basic Fib course, Chris, this is the options applied to Fib. So yeah, it will be a little different. If you got the basic Fib course, yeah, this is more Fib with options. Let me put this. I'm just going to do this real quick for you. Boom, 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 right there. And let me make this super simple for you, and then we'll jump in and do some symbols here real quick. Stop, strike. Perfect. Okay, that guy will work right there. Tradinganalysis.com/strike. All right. Okay. Let's take a look at some charts. Lulu. Yeah, I think, Chris, if you're not happy with it, if you feel like it's similar to the prior Fib course, there's money back. There's no problem. What do I think about IIYT? IIYT. If I can type right. I've never heard of that one. IIYT. Nope, no symbol there. That should be IYT. Okay, that makes more sense. Okay, so what ETF? Is this the housing ETF? IYT? Is that what that is? So, okay, we're in a pretty good downtrend. So real simple, 55 EMAs down. You've got so we're in a downtrend. You get a retracement, low to high. Actually, we got to go blue dot to blue dot, no problem. We're looking for a three-wave swing. I don't really see a three-wave swing yet. It's a little early. Let's see if there's anything here on the... Remember, we only do this inside of the blue dot to blue dot, the 38 to 50%. So there's the 38, nothing below 38. And let's cancel red extension. So we have 50 to 618. So, okay, so we're getting the three-wave swing. So we've got one up, there's a push down. We have made new highs. So if you want to start selling, if we break below the low, I like to do this because this is kind of a longer term trend. I want to see a move below it on the daily. Okay, and then I like to stop myself out above the 786 if you're an option trader. If you're a short term guy, okay, if you're a short term guy, you would have stopped out there and you're looking for the next entry. Okay, because we did get a high bar, we took out the low, so there's a short-term entry. You would have been stopped if you're a day trader. Okay, but I would be looking to sell in this zone. Implied volatility 40% percentile, so I'll be looking to do debit spreads, and it's a pretty expensive stock, so I would look to do a spread down into the 786 retracement. Okay, debit spread down into 786, which is going to be right here at 119. So I would buy kind of an out-of-the-money debit spread once we take out the low of the high bar. See if you can get something down into here. You'd have to do a fib time extension to figure out what expiration, but see if you can get down to the 120 area in IYT. Okay. Yes, this is good for TradeStation. Yep, we have TradeStation, Thinkorswim, Motive, eSignal, MT, Ensign, Sierra. We have all the major charting packages. Yep. Sure. Let's look at Apple. I have some analysis done on Apple for you. I do think. So drawing right there. Let's get out of you. Okay, so Apple, it's a little shallow in terms of the retracement. The only blue dot that I'm really seeing is way up here. We're not going to be at a 38% retracement until a little higher in Apple, so I can't be trading him on the daily chart. But I can trade him over on the 195. So there's the low, most recent blue dot, higher than price. I mean, you can't. This is technically higher than price, but we're, doing a retracement here doesn't do anything for you. So you're going to go to the most recent blue dot high. Okay, perfect. We're not at a 38% price retracement, not until 102.77 in Apple. Now we are getting that three-wave swing pattern. So there's the high, there's the low. I can't enter until we're into the 38% price retracement. All right. Once we're in this zone, then you can look to sell Apple. There's your zone. Okay, I won't trade below the 38%. So yeah, 1, 2, 3. We're looking for the push. Once you take out the low of the high bar, then you can get in. Volatility is very cheap in Apple, 13%. Don't sell credit spreads here. Don't do credit spreads because you're not going to get anything for your option sale. You want to be doing debit spreads in Apple. Okay, I got time for just a few more. Qs are going to be similar. So same situation, right? Where's the most recent blue dot? Right there. And the Qs, retracement, low to high, boom, one. Let me get rid of everything that didn't come into play. 2, 3, 6 out, and you can delete levels pretty quickly on toss. 2, 3, 6, and this is the 50%. Okay, so we're inside of the 50%. So the zone that I'd be selling is in here, and I am net short this market, as I said. If we get above 110 area in the Qs, I'm going to be out. But we are starting to get it. We haven't taken out the low of the high bar, and that would be a signal would be taking out yesterday's low. So yesterday's low was about 105. Yeah, 105. So if we take out the low here today, I'm going to add to my short position with clients. And I'll just show you. This is my website, tradinganalysis.com, and you will be offered a trial as well. So that will take you into the members area, and you get all of the everything that's offered to traders. So we keep a good track record of all the trades we have open in prior months, entries, exits, everything we're doing. The chart room, we give you all the current markets that we're tracking on 3 different time frames. The daily video. Each video is 10 to 20 minutes long, and I take you through each market that we're looking at. And if you want to skip ahead, go to gold, go to Netflix. You can just skip ahead in the video. Pretty competitive offering for our monthly members. Okay, that is that. If you want to take advantage, guys, tradinganalysis.com/strike. Hope you guys want to get involved. And I know you guys are in the middle of a great series of presenters here today, so it's a great thing. Nice collection. I'm honored to be a part of it, and I appreciate all the questions and the feedback. Hope you guys want to work together in the future, and if not, I'll definitely see you around, and best of luck trading. Thanks, guys, for all the comments and questions. Really enjoyed it. Thanks so much.